And one of the things we've had the privilege of doing is steward people's emotions and financial plans through market cycles, right?
Yeah.
And there is an embodiment of wisdom that comes when you trust a particular philosophy through a market cycle. And by the way, when people talk about market volatility, they never mean up. They always mean down. I think it's so
Hmm.
funny when people say, oh, it's a volatile market. No, no, no. Volatile means up and down. But if you're listening to this and it happens to be in a scary time in the market, an uncertain time in the market, a time when the water cooler talk is about how silly or stupid or ignorant you'd have to be to remain invested in an investment portfolio. Uh, Jen, what is our typical message to those people, and what do you think helps people really internalize those lessons?
I think consistency, hearing the same things from us consistently as their advisors. We've shown people also over the years, we've been through quite a few market cycles together with some of our clients, showing them this is how we're going to respond each time and having that be a consistent message of, we've built your plan to include market volatility, right? We've built your plan to include these market dips up and
Mhm.
down, right? The market's going to go up and down no matter what happens in your financial world. That's going to happen, and your plan is built around that. It includes that, and we're okay, right? We're going to stay invested. We're going to stay the course. Our portfolios are designed for that. I would say that that has given a lot of people peace of mind. We've also talked about once you sell out, you have to have a plan to get back in. So trying to predict the market just doesn't work. Having an investment philosophy that does work for up and down markets, having a financial plan built around that really is key.
I think I like to remind people if you want a portfolio that has no volatility, you can have that. It's called CDs, and they pay about 2.5% over the long run, like maybe 2%, or, it's like around there, like just above inflation over the longest time periods. And that's the price you pay for having a portfolio that has no volatility. And for most people who need to pay for their own retirements, it's never going to be a sufficient rate of return.
Right.
Right. If you're listening to this, I mean, Jen and I recorded this around the beginning of August, and there was a couple days sell off in the market. And just as we were getting on this call, it looks to me like the market has rebounded at least half of what sold off. Right. And yet people have been terrified selling out over the last 2 days. And of course, it always feels like when the market's going down, it's never going to come back up. It always feels like that. It even feels like that to us, right? I am a human being who runs a business. My revenue is a function of the level of the stock market. I get scared too. I just don't do anything about it, right? I keep doing the daily actions I do every day to run my business well, and I count on the money to be there. I have been heartened that for many of our clients, just like you said, who've been through a market cycle, sometimes it takes two with us for them to really get their sea legs and experience confidence and peace of mind. But there's people who used to send you and me terrifying headlines from the financial news media, right? And when we talk to them now, they say, "Oh, I'm on a cruise. I'm not worried about money. You guys are right." It always comes back. So that's a big win. And if you're listening, you can get there too.